So now we got under the desk part of the call. I said if Google does what Freedman thought it could and goes down, we're really screwed. So it's down like 5 or 6%. It's not even like not up. What I would also qualify not up Freedman as down.
Yeah. I mean, I think well, I'll just get right into it because in terms of the top line trends and our modeling expectations, they actually looked okay to me. It's close enough to where I thought we'd land for the ad business. The real issue, I think, is around the cloud business and the trajectory there. Interestingly enough, I was actually modeling a deceleration in cloud revenue. I was at actually 20%. They did 22.5%. The street was closer to 26%. And I think buy side expectations were looking for a little bit higher than that. But my expectation for deceleration in the cloud business was really driven around the RPO trajectory and comps kind of coming in here. And so with Google, since the ad business is the majority of the business, I've historically taken that as you get the ad business right. It also has the highest incremental margins. You get the stock right. But of course, with the cloud business decelerating, well, it's not optically, it is decelerating, but relative to, Microsoft's acceleration in Q3 does make Google's Q3 cloud performance look worse by comparison.
Isn't it interesting? I'm just asking everyone, isn't it interesting that Google's going to go down on RPO billing and Microsoft isn't yet? It's like Wall Street picks their narrative. I think that's fascinating. Anyway, keep going.
Yeah, no, and actually I was gonna hit on that too, because I think the narrative point is really fascinating because it's somewhat of a reversal of last quarter, right? And it's just price driving narrative. But just maybe on the cloud part too, because I was looking more closely at kind of the base effects here, right? So Google Cloud decelerated 550 basis points on a 200 basis point more difficult comp in this quarter. Azure accelerated 300 basis points sequentially on a 500 basis point easier comp, right? So the comp dynamics here between the two are a little bit different. So I think that's partly driving a lot of the relative performance here because base effects matter a lot, obviously. So I'm not sure how much you necessarily want to read in, people want to read into the cloud performance decel for Google. I mean, look, a decel is a decel, right? It's not good. You don't want to see that if you're, looking for a reason to be long the stock. But I'm not sure it necessarily speaks to, competitive drivers between the two in this quarter specifically, because again, we have those comp dynamics. The ad business continues to improve in line with my expectations. I still think we see further improvement in Q4, assuming no further escalation in the Middle East, which is a big assumption. The OpEx dynamics alone are enough to justify the stock being down here off this earnings event. I would be much more concerned and probably punting Google here outright if the street was already modeling a big quarter over quarter increase in margins Q4 versus Q3, but they weren't. Expectations were already for flat margins, Q4 versus Q3. So I really don't think numbers are going to change that much here. And at 130, I think at worst you have $10 to $15 of downside, $30 to $40 of upside, kind of over the 6 to 9 month duration. So, we'll continue to watch how the data is tracking, but for what I care about the most is really the ad business, which is tracking kind of in line with my expectations. And again, Q4, we do see a bigger step up sequentially in revenue. The street's not modeling a big impact to margins. So I don't think, this margin disappointment in Q3 necessarily translates to negative revision trends going into Q4.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.